Good morning, everybody. Welcome back to another coffee hour stream where we're going to be talking about all the stock market news that's been coming out. We have a couple topics that we're going to be covering, primarily about Meta, Facebook. We'll be talking a little bit about an IPO that I'm going to be keeping an eye on, and we'll be talking about a couple other segments, especially with the whole Trump tariff thing. And obviously we had a green day today, which was fantastic, because we've all been pretty much brutalized these last couple of weeks, and it's nice to just see green. I finally recovered in one of my positions, which I'm very excited about. I also opened a new position today in the stock market, so I'll be covering all of that and more. So let's get into it, guys. Let's just get into it. Let's get right into it. I just got to take this quick sip of coffee before we get started. All right. And of course, there is a poll. I would definitely like to hear you guys' thoughts on whether we bottomed or not, or do you guys think there's more pain ahead, or are you guys cautiously optimistic? Okay, so let's get into it, guys. Voted no on the bottom. Yeah, I have my own thoughts about that, so I will share those a little later. All right. Let's get started, guys. So today for the portfolio, I had to redo this portfolio a bit because I think the website stopped working, and then of course it did stop working. Stock data is currently delayed due to an issue with the provider, but I'm still going to show you guys what I did. Hopefully, it's reflecting the most current numbers. So annual net income still $54,000, March income $4,700, yield on cost, and then dividend yield. And then if we look down here, I'm actually only down $22,000 versus my highs of about 34 or 36,000. That's across all portfolios, or both portfolios. So that's a welcome sign that, we are recovering, that we're looking good. I did open a new position, so I'm using about $80,000 worth of margin for this cover call ETF stack that produces about, $52,000 in dividend yield. All right. And I know that 52,000 plus 10,000 does not equal 54,000. This is what I'm saying. Like some of the data is not populating on this website. So of course, all these dividend yields, they can fluctuate from time to time because as dividends are paid out, especially on cover call ETFs, the cover call ETFs, their dividend kind of fluctuates from month to month or week to week. So you got to kind of take that with a grain of salt. All right, so let's get into the news. I want to start off today with a video that came out a couple of days ago from CNBC for Tom Lee. And Tom Lee is FundStrat's chief strategist or investment officer, or whatever the title is. But I like to listen to Tom Lee from time to time. But again, you got to take these financial pundits with kind of like a grain of salt, because they're just talking about what they think is right, and a broken clock is right twice a day. So let's just listen in and hear what he has to say about our current market and if we reached a tradable bottom. All right, so let's get into it.
Our next guest says the Fed put is alive and well, and that's one of 4 positive signs he's seeing for the markets this week. Joining us is FundStrat's head of research, Tom Lee, also a CNBC contributor. Tom, it's good to have you, and let's just kind of start with that theme, and maybe you can build on what Steve just told us. How do you interpret the Fed's move yesterday? Welcome.
Well, I think markets were positively surprised by the Fed's move, in part because recent staff papers from the Fed had argued tariffs would actually be multi-year inflationary effects. So Fed Chair Powell's comments yesterday, I think, did catch a lot of folks by surprise, just because it is a view that markets probably want to hear, that they'd like to hear that the Fed is viewing tariffs as possibly transitory, because that puts...
I got to stop it. Whenever I hear this word transitory, man, I just get like this really bad image of what happened during COVID, when we said that inflation was transitory, and it was not. Indeed was not. So yeah, it's just funny to hear that word come up again. So I don't know.
Some in a position to actually intervene if labor markets start to weaken. And in fact, that's evident in the SEP, because 90% of Fed staffers now see not only risk to growth, the GDP growth forecast, but it was 90% seeing it as downside risk.
Steve, would you agree with that characterization, or how do you think the Fed or Goolsbee or a member like that might respond to the idea that they're still at the ready to support the economy?
They're at the ready to support the economy through keeping rates where they are right now. He kind of took off the table, or never has put on the table, this idea of hiking rates. I think it's a difficult and very interesting dance, the Fed effect. But then being ready, feels like he's restrictive enough, negative effects of the where the Volcker Fed or the Volcker.
Granted, the inflation back then was very different than what we're dealing with now. Tom, even as the markets are digesting what Steve said, this kind of lower growth, stickier inflation environment, and not taking it all that well.
So you guys remember that, last week the Fed came out and basically said that inflation is still very sticky. Kind of changed the whole tone on the tariff talk. At first, it was, tariffs are not going to be a big deal. They're a one-off type of thing. They may impact, a little, in the short term, they may impact the economy, but over long periods of time, not really. And then it seems like Jerome Powell just kind of started changing his tone, saying, well, actually, we might have some longer term inflation. We also have a consumer base that's being affected, or retail that's being affected. So yeah, that's essentially what she's, kind of summarizing for us from the Fed talk last week.
What are the other positive signs you're seeing for stocks this week?
Well, I think that the sort of the big elephant in the room has been the absolute fear that has become systematic in markets around April 2nd and the tariff deadlines. And I think that there have been little hints this week that instead of April 2nd being the date of some sort of annihilation of trade relationships, that we may start to see either deals before then or even delays in implementation. And I think that really investors are going to breathe a sigh of relief because, as you can tell, pessimism has become very pervasive because of the fears of what will happen on April 2. So I think that's a positive. And then the other is, and it's really a technical perspective, but Mark Newton, our head of technical strategy, has pointed out there are increasing signs of that we've actually established a tradable bottom. And that's not only the fact that we declined so quickly, but it's that market breadth has really been expanding and then actually following through in a way that looks like this is not a 10% decline that's leading to a 20%, but a 10% waterfall decline / heart attack for stocks driven by rage selling, and now it's tradable.
So those.
All right, that's pretty much it. There's so much comments out there. People are saying, oh, Trump is setting us up for a J type of recovery, right? Again, everyone has an opinion about where the market's going to go, and they can show you all these fancy charts and all this historical stuff and blah, 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 blah. But really, nobody knows exactly what's going to happen tomorrow or next week when it comes to the stock market, and certainly not when it comes to Trump. So April 2nd could be, I still think it could be a day of reckoning, depending on what happens, right? Depending on the news from now until April 2nd. We still, have to wait and see. There was a narrative that was pushed out by the Trump administration about using targeted tariffs, which we'll cover later in the stream. And apparently that was a good sign, right? That was a good sign for the market. And we did talk about this tier list that the Trump administration is going to implement. We talked about it last week. I finally found that article. I just have a brief summary about it, which I'll cover here in a minute. But anyways, that's from FundStrat's, Tom Lee, and he's basically saying that, yes, we're at a tradable bottom right now. This could be a good thing, from here until April 2nd. April 2nd is kind of this overblown, boogeyman, looks like the market's recovering. We're going to be good, or maybe this is a dead cat bounce. Who knows? So anyways, wanted just to quickly look at the heat map. Of course, green, lima bean. We did really well this week. Thank God. Again, my portfolio recovered quite a bit. I'll be covering a deeper dive of my portfolio at the end of the stream, but definitely looking at all green, fantastic. A lot of the major players, a lot of the major tech companies look like they're on an upward trend. So, this obviously impacted the broader indexes, right? The broader markets. So rising tide lifts all ships. So real quick, just want to look at the fear and greed index. We've covered this a few times, but we're now out of extreme fear and moving into just fear. All right, so that's really good. This was at one point at 18. We were super in the extreme fear category. It looks like, investors are starting to feel a little better. Again, I'm still honestly cautiously optimistic about where we are. I still want to take a wait and see approach. I don't want to make any large purchases. I mean, I did make a large purchase, but that's because I'm still very bullish on Nvidia, but I don't want to take any, I guess, higher risk, right? I don't want to take any higher risk. There was something I was looking at specifically between Nvidia and AMD, and I actually just found it today. I was trying to think of, do I want to go with AMD, which is more of a value, kind of a deeper discount? I still don't think AMD is going to have a chance at knocking Nvidia off the stool. But you know, if you want to make some money and, you know, at least capture some gains from AMD, you know, that could be a good play. But I ended up finding something that, you know, is a little comparable. It's a little faster than just investing in AMD shares. And I'm not going to be investing in AMD cover call ETFs. So I'll cover that a little later as well. But here's the AAII, the American Association of Individual Investor Survey, and it's just a sentiment survey just to check in kind of the pulse of, you know, how the market's doing. Sorry, I got to get this AC working. It's hot in here. But yeah, we've been pretty bearish the last couple of weeks, so I'll be covering this again on the 26th is when the new one should be coming out. So 26th is on a Wednesday, so I'll be covering this again to see where we're at. Again, over the last couple of weeks, we were very, very bearish. Right. And the market obviously was reacting. We saw it firsthand, especially if you're investing. Right. We saw it firsthand. Markets are taking a nosedive. So one interesting article I did find, and this kind of goes with the whole. Well, let me see if you guys can see that. This kind of lends to the whole, you know, Magnificent Seven kind of just stagnating. They're looking for other ways to make money, right? They're looking for other ways to break into the markets or into other markets. And I did mention that, you know, when companies get too big, you see this in the real estate space. When REITs get too big, they don't buy individual projects anymore. What they end up doing is buying portfolios, or usually they end up doing what's called M&A activity, mergers and acquisitions. So this is being seen absolutely in the tech sector, right? Google just purchased Wiz, which is a cybersecurity company, right? I don't have the article. I wish I pulled it up, you know, speaking about it. But Google actually purchased Wiz, which is a cybersecurity company of the top Fortune 100 companies. So Google bought them because they did not want to create their own cybersecurity arm. They didn't want to create their own cybersecurity software. So they just bought this cybersecurity player Wiz for $32 billion, right? They talked about doing this about a year ago. And then it looks like after working, I guess, with, I don't know, the legal system or something, because it was, I guess, creating a monopoly of some sort. They actually ended up going through and purchasing Wiz, right? So this puts Google directly in competition with Microsoft, because Microsoft has their own security suite of software, their own cybersecurity stuff. So Google looks like it's, you know, instead of trying to create this whole thing, they just decided, hey, we're going to buy one of the best players in the space, and they purchased Wiz. So absolutely crazy, right? So Meta is trying to do the same exact thing. They're running out of ideas, right? Meta, you guys know it as Facebook, right? We all know it. There's Facebook ads. They generate probably a good portion of their revenues from ads, right? This is the crazy thing about Meta, right? They're running out of ideas too. At one point in 2014, they try to do what Tesla is now doing, right? Starlink, but they try to do this drone in the sky. You know, it has like 100 propellers or something, and it was supposed to stay in the sky for like 180 days at a time. It was going to be solar powered, and it was going to be beaming wireless internet to very desolate areas, right? So that was their idea. Then that idea flopped. Then they moved into the metaverse. That idea flopped, right? I'm pretty sure it's flopping at this point. And then they used to have what was called, the Libra token or something like that, their own crypto. Like that died, right? That died on the vine. That went nowhere, right? So Meta is really trying to figure itself out. It's really trying to find an identity for itself. So then they approached this Korean AI chip maker, FuriosaAI, with an $800 million offer to purchase their company. So Korean chipmaker startup FuriosaAI has rejected an $800 million takeover offer from Meta Platforms, Bloomberg reported, citing a person with knowledge of the matter. Meta had been in discussions about acquiring Seoul-based FuriosaAI since the start of this year. The report said FuriosaAI, led by Jun Paik, who formerly worked at Samsung Electronics and Advanced Micro Devices AMD, develop semiconductors for AI inferencing or services. All right. Meta's chief executive officer, Mark Zuckerberg, has told investors that Meta anticipates eventually spending hundreds of billions of dollars on AI infrastructure. The Menlo Park, California-based company is also working on its own chips designed for its own AI workloads, and in 2023 introduced its first custom AI inference chips and it unveiled an upgraded version last year. So again, it's these companies, these large, magnificent 7 companies that are running out of ideas, and they have to find ways to basically continue growing, continue generating a lot of revenue. Now, don't get me wrong. These companies are not, they're not losing money. They're just not growing, right? They're still worth billions and billions and millions of dollars, right? These companies are still making a lot of money. It's just they're running out of ideas. They don't want to become irrelevant. So usually what these companies have to do is they have to look for investments in other businesses. They have to acquire other businesses, or they have to start their own stuff. And usually starting their own stuff is very, very expensive. Instead, they would just rather acquire, through a M&A activity, they would just rather acquire businesses that are doing exactly what they want to do. So really, really, really interesting. All right. Again, I don't invest in Meta. Meta's not really my thing. And I've said on the stream before that, the Magnificent Seven, they've peaked, right? They've peaked in growth, and now they have to look for new ways to stay relevant. You see this again with just what I spoke about, Google acquiring Wiz. You're going to have Tesla that used to be EVs, right? Then battery technology. And now they're doing robotics, right? With their Optimus robot. And they're probably going to be breaching into AI at some point in the future. They probably already have their own AI if under development or something like that, right? So just interesting. Interesting is what I am trying to say here. Anyways, efficient AI inferencing is here. This is from Furiosa's own website. This is what they're trying to acquire, right? This is what they're trying to buy. Everything is all about AI now. Everything, the whole industry. This is where all the money is going to be made. I just posted on my YouTube post or community post, whatever, that the UAE, the United Arab Emirates, where Abu Dhabi is and Dubai is, they're going to commit a $1 trillion investment into the United States for manufacturing, AI infrastructure, and a couple other things. And this is going to be over a 10-year period, all right? It's not going to just happen next year. But again, there's a lot of investment coming into the United States for artificial intelligence, right? For manufacturing and for the infrastructure. So again, being an investor in AI-specific companies or AI companies that are going to have a hand in the development of the infrastructure, either through chips, server hardware, or developing the actual, software, the actual AI stuff is going to set up a lot of investors. You could go with just a regular ETF if you want. I chose to go with VGT just because I don't want to pick and choose a lot of these players. I'd rather just own the whole market. And VGT is a tech-specific sector ETF. Now, you could also consider some of the other ones. I covered it in another video. There's AIQ from Global X, as well as bots if you want to do more robotic specific. If you want to invest in just US-based tech companies, IETC from, I think, Invesco or ProShares or something like that, they also have an ETF that is specific to the United States. It excludes all other countries. AIQ and bots, I believe they include countries like China and countries in Europe. Again, I'm of the camp that I want to bet my money on the American economy and on American innovation. So I would rather invest my hard-earned dollars in American companies. So just my thoughts on that. All right, moving on. CoreWeave. CoreWeave is something exciting. This is a NVIDIA-backed company, okay? This company is going to be making a lot of waves soon. I could see this company becoming, probably, I don't know. It's going to be it's going to make a big splash when it comes out. So CoreWeave is a NVIDIA-backed company. They're seeking an IPO. Now, what makes CoreWeave so special is that they offer data centers, or they own data centers that are GPU specific. And GPUs, just real quick, there's CPUs, for that we all know, Intel-based CPUs, and then GPUs are making all the waves right now. They're all the rage. They came out, NVIDIA really became really popular during the Bitcoin hype of 2013, 14, 15. when miners were like really trying to get their hands on NVIDIA GPUs, right? And then, further research determined that NVIDIA or GPUs perform better, calculations over CPUs. So now with this whole AI craze, GPUs are all the rage. So instead of having, like Intel based or AMD based server racks, server data centers, CoreWeave is going straight for GPUs, right? This will be an AI specific data center to handle AI specific workloads. So I really think this is really cool. So anyways, CoreWeave, the hyperscaler startup backed by artificial intelligence powerhouse NVIDIA, is targeting a valuation of up to $26 billion in its initial public offering, right? Its IPO. So when this comes out, I'm excited to see this come out. I really want to see what's going to happen. I haven't done a deep dive into CoreWeave, but I'm definitely going to add it to my kind of watch list of AI companies. I think this is going to be one of the major players in the future, especially because they're already starting off on the right foot. They're already starting off with data centers that have GPUs, right? GPUs specific for AI development, AI research, AI operations, right? It's basically the factory. All right. So this is going to be a really cool company to look in the future. So this is, kind of what they're offering. Again, if you guys go back and look at the, the NVIDIA GTC conference for 2025, a lot of interesting technology in there. They're able to take what used to be like really hunky, large amounts of hardware, and they condensed it. And it costs less and it uses less power, but it's twice or even 3 times as powerful as its previous iterations. So hardware is just getting more and more powerful, and companies like CoreWeave, they can have what would cost, hundreds of thousands of dollars. Now they can cut their costs in half and have 2 or 3 times the power to provide for their customer base. So again, I really think this is really cool. The whole Blackwell chip is really interesting. Again, I don't know the super specific technicals. I mean, there's so much crap in AI to cover. I could probably spend a whole day reading about it and still barely scratch the surface of it, because there's AI inferencing, there's agentic AI, there's from NVIDIA, they have their CUDA libraries, and the libraries are basically a ton of these, like documented token things. I'm sounding stupid, but I'm still very ignorant of like the entire AI ecosphere, right? But I thought, the presentation was really good by Jensen. All right. I'll just leave it at that. But yeah, the technology is constantly evolving. It's really, really cool. And again, as investors, I just want to make money. I just want to make money on not just the hype, but what is the future, right? I missed all those tech waves. I missed all the Google waves. I missed the Meta wave. I missed the freaking NVIDIA wave, I guess. The initial wave. I missed the Microsoft wave, the Apple wave. I missed all of that stuff. So now, because I was always invested into index funds, right? I didn't know really how to do any of this type of research. So now, as I'm getting into it, I'm getting excited. I'm learning a lot more. And, you can go with the whole, PE ratio, looking at or digging into the balance sheet and being a forward-looking investor and stuff like that. That's all great. That's all good stuff. I like to invest a mixture of those things, but I really like the story, right? I really like the story of what makes these companies very interesting. So that is that. Yeah, and It's a Wealthy Life says I missed the Tesla wave. Yeah, I definitely did, for good or worse. Strategies in the news again. They just made a purchase of 6,900 Bitcoins for $584 million last week. All right, Michael Saylor is at it again. Love him or hate him, he is continuing to buy, right? He's continuing to buy as much Bitcoin as possible, and he's using all the money from, Strike. He's using the money from the preferred shares, and he's using money from basically the convertible notes to raise all this money to buy more Bitcoin. All right. This guy is like the modern day supervillain for Bitcoin, because Bitcoin was never supposed to be centralized. Right. Bitcoin was never the goal of Bitcoin. And now you have governments, you have companies that are just basically buying as much as possible to corner the market. So, who knows, right? It used to be that crypto was used to, not as a hedge against fiat currency, but basically as a way to not get screwed by the manipulation of fiat currency, right? 2008, 2009 is essentially when Bitcoin came out. The white paper came out, and the whole idea was that it was not going to be, centralized. There was going to be no government oversight. It was going to be free for the market. There was no control. Anyone could mine for it and anyone can own it, right? But now it's like everyone's buying this thing, right? So who knows about the future of Bitcoin? It's interesting to see what could happen, because if there was any type of liquidation event from someone like Strategy that owns so much Bitcoin, I can only imagine what that would do to the entire Bitcoin industry, right? Or all the Bitcoins owned by individuals. How bad of a drop that could potentially be. So we'll see what happens. Tesla, speaking of Tesla is in the news. It looks like they had a really good bounce back. All right, shares are still down more than 40% from the 52-week high, but they had a great bounce back today. Tesla started off the week with a strong jump as some investors latched onto the news that the company is closer to officially rolling out its full self-driving product in China, and news that President Trump is backing off some broad tariff threats from a few weeks ago. The rally for Tesla followed 9 consecutive weeks of losses that set shares 50% below the 52-week high. Looking ahead, Tesla faces more global protests on March 29. The protests will primarily target Tesla showroom supercharger stations, including 277 Tesla locations in the U.S. and hundreds more internationally. Essentially, let me read this last part. Tesla will also issue its Q1 deliveries report next week. The report is forecast to show sharp decline in quarter-over-quarter and year-over-year deliveries. However, the bullish narrative for Tesla is more focused on catalysts such as the autonomous driving launch in Austin, Texas, the Cybercab, and the Optimus humanoid robot upside. So real quick, I saw another article about this, especially the whole protesting in the United States, burning Teslas, attacking Teslas, damaging Tesla property, et cetera, et cetera. It looks like the FBI is putting together a task force, or they already have put together a task force, because a lot of this stuff borders on the line of domestic terrorism, which is a welcome sign, because it is. I mean, whether you love or hate Elon Musk or not, I mean, you're damaging and placing incendiary devices or bombs inside freaking Tesla showrooms or under Teslas, owned by people, right? So this is cases of domestic terrorism. And it's been in the news that, these people are going to basically, if caught, face 20 years in prison, or if not more, right? It is what it is. People really mix politics with too much. And I think we just have to, as a people, we just need to kind of take a step back and not take it out on other people. But yeah, Tesla, when all the rioting and everything was happening across the country for Teslas, even in Europe, the narrative was that basically, that was driving the share price to go down. Nobody likes good or bad press releases, right? And you can't get a worse press release when you have Europeans damaging Teslas, Americans damaging Teslas, and not only that, you also have China that's basically out competing Tesla. So all of that was basically a bad news salad, and coupled with under delivering Tesla products, that basically drove the whole Tesla share down. But we got some welcome news. So again, if you're bullish on Tesla, congrats. If you own Tesla stock and you've owned it for a while, you have my absolute respect, because I could not handle that type of volatility. I would have already cashed out. So you have my utmost respect when it comes to Tesla owners. All right. Anyways, we're going to be moving into the market segment, and then we'll cash it out with the portfolio updates. All right. NASDAQ, S&P, and Dow rally as tariff plans appear more targeted. All right. So I found a couple articles here. this is what I was talking about last week. So the Trump team is exploring a very simplified plan for reciprocal tariffs, right? So what they wanted to do, and I don't have the full link. I'm not rich like a lot of you people, all right? I'm not going to be paying for the Wall Street Journal, but basically what they wanted to do was have 3 tiers, right? 3 tiers, and then place all these countries in these tiers, right? Low, medium, high. And then that would be, kind of a simple plan or approach to who's going to get the most tariffs, right? So that was the initial idea. That's what they've been toying with. And it looks like it's coming to fruition. So up here, Trump plans his tariff liberation day with a more targeted push. President Donald Trump's coming wave of tariff is poised to be more targeted than the barrage he has occasionally threatened. Aides and allies say a potential relief from markets gripped by anxiety about an all-out tariff war. So this is a welcome sign because, again, I think if he was to go with this, and this didn't come out that long ago, this came out last week, right? I think if he would have went with this would have definitely been one of the harbingers for April 2nd. Like this would have been the nail in the coffin for a lot of people. Now, me personally, I'm a little more cautiously optimistic because, now it's going to be, it's going to be a tit for tat, basically, right? Which is what it should be, in my opinion. Like if countries are targeting the United States for tariffs or whatever, then this makes more sense, in my opinion. So I'm not going to get into the deeper article, but also there was also another slice of news that came out about tariffs, especially with Venezuela, right? Venezuela is basically providing oil to other countries, and the United States basically came out and said, if people are buying oil from Venezuela, we're going to put tariffs on them, right? I don't know if that's actually come into fruition or not, if that's actually going to pass or not. But again, I'm surprised that the market didn't react negatively to that news. Maybe investors are already pricing that in, and they're just like, whatever, and the market's green for the day. So who knows what tomorrow is going to bring? Hopefully we have another green day and green days for the rest of this week. All right, so real quick, going over the market updates. S&P 500, we are up 1.76%. That is a major jump, thankfully. For NASDAQ 100, we are up 2.16%. For Bitcoin, whoever's holding Bitcoin or whoever's holding Misty or whoever's holding MSTR, I tip my hat to you because it wasn't that long ago that this was sitting at $80,000, right? Dropping 79, and it looks like it's starting to recover. I still think there's a possibility of a crypto winter on the horizon. Maybe this is just, optimism right now. It jumping all the way up here. Again, you never really know with Bitcoin, but the general consensus that I have found in the crypto communities is that, crypto winter is here or Bitcoin winter is here. So who knows? Again, cautiously optimistic. If you're a long-term investor in Bitcoin, you're actually holding either the ETF version or you're holding the actual Bitcoins in your own wallet, and you're holding them for a long period of time, or you plan to hold them for, a long period of time, then who cares about these little, downward trends or these upward trends? Like nobody really cares about the short-term volatility, especially if you're going to be holding for years, right? Because next year it could be up to 150, or the following year it could be up to 200, right? We don't know, but short-term volatility usually scares off a lot of investors. For gold, all right, this is a welcome sign. This is actually a welcome sign. I think it's a good thing. There was a lot of outflows from gold, okay? Still the best performing asset year to date, but it's nice to see an outflow because that tells me, as just a person who's observing the market, that investors are less worried, right? Investors are, the market sentiment has turned, at least for the day, and their outflows are probably going back into, equity assets, stock market, probably Bitcoin, things of that nature. U.S. Treasury, a little bit of news came out. U.S. Treasury yields rise as fears of an all-out trade war ease. Okay, so that was a welcome sign. Of course, you guys know we use the 10-year Treasury as kind of a weather gauge on how mortgage rates are doing. So it looks like we're sitting at 4.33%, which is kind of a bummer because not too long ago this was down almost to 4.18%. So again, I just like to look at this. This will tell me how REITs are doing, but surprisingly, REITs actually did pretty well up 1.54% across the entire market. So my REIT portfolio had a decent recovery today as well. All right. So real quick, just want to cover this. AMD, right? So I was thinking, what if I wanted just to kind of hedge my bet against NVIDIA and go with something like an AMD 2x long position, right? 2x long means that it's going to have basically double the power, right? If AMD goes down, you're going to feel it twice. If it goes up, you're going to feel it twice, right? So these 2x long shares, I was thinking like, man, I could probably hold this, because right now it's at its all-time low, right? This didn't come out that long ago. This came out in what, 22 March of 2024. So it's about a year old, but it's just been on this downward trend, right? If AMD was to actually recover in price, this could be a nice little gain here. This could be a nice little gain, right? If we look at the AMD stock, the actual AMD stock, and if we look at, I don't know, let's look at the 1 year, it's just been trending down, right? So who knows if this is going to go back up. I think what's been really hitting AMD stock is that people are really more in favor for NVIDIA, and that AMD is not going to be taking away the market share from NVIDIA for AI, right? AMD is still operating on this whole like server rack, laptop, desktop type of deal. They're not really known for their graphics processors. They're not really known for that. They're really known for just their CPUs. So can Lisa Yu, who's the CEO, if I'm not mistaken, Lisa Su, excuse me. Can Lisa Su turn this around? Because they have been developing their own AI chips. It just hasn't really taken away much market share. So everyone's buying NVIDIA GPUs. Everyone's using NVIDIA GPUs for their AI production, right? For their AI agents, for their AI development, for all that research, et cetera, blah, blah, blah. So I don't know if AMD is really going to make a recovery, but I was thinking like, hey, if it does, I could just drop in a couple grand and then just hold the shares. And if it recovers, great. I'll just cash out and make a little, couple bucks here and there. Can AMD go lower? I think is probably the better question. I don't know. Nobody knows, right? They could come out tomorrow with something that just absolutely crushes NVIDIA. But again, I think that they don't have the partnerships. They don't have the technology. They're still far behind what NVIDIA has already built. But they're slowly starting to get there, right? They could slowly get a partnership here and there. This will probably be like a long-term type of deal. You're thinking maybe at least 5 years, right? But I don't know. This AMDL just looked kind of interesting to me, but as I, kind of think out loud, maybe I'll just hold this for a couple months, if that, swing trade it and then sell out for a profit. So that is my thoughts on this whole AMD stuff. So just going to look at the comments and then we're going to hop into the portfolio update. All right. First off, thank you everyone for joining. All right. Really appreciate you guys hanging in there. Hope you guys are getting some entertainment, some value from all this news, and you guys helping you navigate what's happening in the broader market. All right. Shannon says, not going to lie, I'm disappointed. The market went up. I thought it was going to trade sideways until April 2nd, then go down 2 or 3%. I wanted to spend. I've been buying Robinhood for holding long term, and now I have to wait for another dip. Yeah, I think I've missed a boat on my latest purchase, which is NVIDIA's 1-2x levered position ETF from Roundhill. I think I missed a boat by a couple percentage points, but I mean, I'm holding this for the long term. But yeah, I definitely feel that as well. BR Supreme referencing the acquisition by Google for $32 billion. Yeah, Meta is trash. I agree. Meta is disgusting. I personally never owned Meta. I just don't know what the whole thing is with them. They do make a lot of money, though. They make a ton of money. But I just never found them to be like, there's nothing sexy about Facebook, right? There's nothing in there that excites me as an investor, right? I mean, who wouldn't like Amazon, right? Who wouldn't like Amazon? Who wouldn't like Google, right? Who wouldn't like Microsoft or Apple? But just Meta itself never really excited me. Shannon says Meta is making a lot of money from Guardian bikes. I see 1 million ads for it every. Yeah, they make so much money from ads. That's absolutely true. Senpai Steve says strategy over spreadsheets every day of the week, bro. Every day of the week. We need real strategies. Same on the American companies. The boggleheads would die if they saw my portfolio. Man, the boggleheads, they annoy me more than anybody. Like, they are true index purists. Like, you cannot, like, there are some communities out there. I'll just call them cults. There are definitely some cults out there when it comes to investing. But I think boggleheads takes the lead on that one. They are absolutely the fundamental index purists out there. Like, you can't even approach them with a single stock. They will just cast you out as like a freaking as like a diseased person. What do they call them? Lepers, I think. Anyways, Geyser says he's just checking in. Talk to you soon. Absolutely welcome. All right, thanks for dropping the comment. ASML. So yeah, Citizen brought up ASML. He did an excellent video. If you guys haven't checked out Citizen of the Year, you need to check out his YouTube channel. I just saw ASML. Fantastic company, right? I really, really like that video. It saved me a ton of reading time because I do have ASML as part of my Titans watch list. All right. I think it's an awesome company, and it's the only one of its kind so far that I according to his video. All right. So don't quote me. All right. If you're going to bash on anyone, bash on him. But no, ASML, the technology is really cool. I have to dig more into it and see if they do have any competitors. I don't know that for fact. I personally don't know that for fact. But ASML, I've seen that ticker come up a couple of times, and I was just about to start my research on it. So again, Citizen of the Year, shout out to you. Appreciate you making that video. That really did save me a lot of time. And it is a well put together video. I was surprised you didn't mention anything about, high yield dividends or Misty or, margining to the tits. So great video, guys. You guys need to check that out. It's a Wealthy Life says pricey. I agree. It is like a $600 stock or something like that. Maybe it's not a dollar, whatever Netherlands money is, but yeah, it is a very expensive stock. It's a Wealthy Life says Tesla owns the 5th largest data center. That's crazy. I did not know that. That is wild. I didn't know that about Tesla, that they own the 5th largest data center. I'll have to look into that. Citizen of the Year says tech is constantly changing too, referencing basically the AI chips and technology. Absolutely, 100%. It's too much to keep up with. Like, I was going through the GTC conference restream or video, whatever. I was keeping up, but when he starts breaking into like the math and the laws and stuff like that. Like, I understand Moore's law, right? My background is information tech. So I've been in the technology industry for some time, but when he's going through all this stuff, I'm like, man, holy hell. Like, I can't even keep up. There is so much changing because what we know as AI, like ChatGPT, right, is something completely different to the enterprise, something completely different to corporations. He's talking about creating, like basically, I forget what he coined the term as, but you're basically creating a AI data factory or AI factory, right? You're creating it using his technology, his software. And it just, I don't know, it goes way too deep. And I was like, holy crap, this is wild. But there's other companies, other big names out there that are starting to do this. They're starting to make their own factories, right? And it's not a factory like a physical factory. It's a factory that's, digitized. And I thought that was a really interesting concept. It was really, really cool. XAI owns the largest. Okay, I'll have to look into that. Oh, okay, yeah. If you're talking, okay, all right. Now I see. Okay, I understand now. Yeah, so because Elon Musk has his hand in XAI, he's trying to take over OpenAI. And Tesla, yeah, they would need a data center because of all their autonomous driving cars, all their cars on the road that basically are sending data to the data center. So yeah, I could see that. Citizen of the Year says, brother, where were you when I was making videos of this back in 2019? Matt, let's see, 2019, I was in Kuwait on shitty government internet that like paused every 5 seconds watching a YouTube video. That's where I was. I was in the middle of a freaking desert. So I was still investing, but I was only investing in like index funds and real estate at that time. And I think REITs as well. I think, I can't remember. So you are missing the Tesla wave, says it's a Wealthy Life. Totally I definitely missed it already. I'm going to miss it again. Massive bubble. Seeking Alpha Premium. Yes, I do have Seeking Alpha Premium. This has flipped the narrative with MAGA. They love Teslas. Now they are buying. That is funny that you mentioned that, Dan, because like I was thinking that was going to happen just because they want to support Elon Musk, because the narrative used to be like Tesla's EVs were for like hippies, right? Like, Greenpeace and all that type of stuff. Green energy is what I meant, not Greenpeace, but green energy, right? And now it's flipping to probably the Republican side of the house, the more conservative side of the house that typically wants trucks, right? They want gas powered trucks, fueled by dead dinosaurs, right? And now they're like, oh, you know what? Elon Musk is a great guy. Maybe I will buy a Tesla to support him. And they're seeing how cool Teslas are. So I think the customer base might shift a little bit. I was thinking the same thing. It's actually really funny, but who knows, right? Who knows? We'll see what happens. I'm surprised they're not launching the self-driving Tesla cars in California. I don't know if they have or didn't. And they're starting in Austin, right? I'm thinking like red state, blue state, right? So really, really interesting stuff. It's a Wealthy Life says Bitcoin looking weak. Doge doing the job. We are only 20 points from the 52-week low. On AMD, look at the market cap of AMD versus NVIDIA. Yeah, that's true. The gap is insane. Yep. It's either Citizen of the Year says it's either this or Kamir. Thank you, because I didn't mention all of the things it did terribly on the algo. I don't know, man. I thought the ASML video was fantastic, but again, people want to see portfolios. They want to see large numbers and things like that. I don't know. I guess if you want to do that and just sort or filter by highest yield and then buy that, there is probably a bigger audience for that. But I like deeper research. I like, understanding the products and services that these companies are offering and what makes them so, attractive. That's what an investor is supposed to do, not just, oh, this guy showed this chart and it has this high yield and, oh, this is a good buy, right? Because he bought it. Like, that's a stupid way of going about it. And then Shannon says Elon got pissed at the state of Cali and left there for Texas. Oh, that is true. That is right. That is true. I totally forgot about that. Yeah, I don't like to claim it anymore, but yes, I was born in California, and I didn't stay there long. I moved actually to the East Coast. But yeah, California, I couldn't imagine what it looks like nowadays. Anyways, moving on. Let's move on to the portfolio stuff, and we'll close out this stream, guys. All right, let me minimize this. Get this over here. All right. Pull up the chat. Okay, so hope you guys can see this. Yeah, you guys can see this. All right, so this is the portfolio, obviously all in the green. I don't know why NVW kind of dropped after hours. It looks like NVIDIA is doing actually well, but I guess, I don't know, this ETF I bought is screwed up. Still down across most of my positions, but it looks like PLTW's made a good recovery. And it's going to continue recovering as long as Palantir continues to recover. And again, I'm still very bullish on Palantir, but I opened a new position, and the new position was an NVW from Roundhill. All right, this is the NVIDIA Weekly Pay ETF. This is a 1.2x levered position. And, just food for thought, PLTW and NVM, NVW, they were 100 maintenance requirement ETFs. And now they're 30%. This happened today, like as the market opened. I was very surprised to see this, because when I tried to buy this on Friday, or I think over the weekend, it was 100%, and I was only able to purchase for, I think, like a couple $1,000s. So I was like, okay, whatever. Like, at least I'll get a position and I'll get some shares, at a discount for now until I move out of the Ethereum cover call ETF later this month. So I was like, okay, at least I'll be able to get that, right? But then they dropped this to 30%. I was like, holy crap, like that's really cool. So very thankful for that. So I was able to drop more money into here. And you guys already know that I am margined to the tits on this portfolio, okay? Buying power, which interestingly enough, my buffer is at 47% after I made the investment into NVW. Okay. And that was obviously because the maintenance requirements dropped on PLTW and NVW. But when those drop, like this used to be like 20,000 or 30,000, and now it's 45 with the investment, with the additional investment. So very pleased there. Again, I I copied, you know, another prominent YouTuber out there, love him or hate him, Oracle ETF. Again, shout out to you, sir, if you're listening. But he's the one who basically taught me how to margin stack correctly, excuse me, and not just filter by highest yield and buy and then take margin against 100%, you know, maintenance requirement ETFs. So this has held up very well over these last couple of weeks, over these last couple of brutal weeks, especially with the volatility being as high as it was and seeing drops like crazy. Very happy that this is, you know, still very low risk, and I'm going to continue using margin. I'm very comfortable with using margin. I already had a lot of borrowed money on my M1 Finance because I use that money to invest into real estate. So I was already comfortable with, you know, kind of the risk, right? But I always stayed away from cover call ETFs and income producing ETFs because I just, you know, thought a lot of them were kind of stupid, NAV eroding, you know, pieces of garbage. But, you know, after actually digging into stuff, learning about them, spending a lot of time around these communities and going through probably hundreds of hours of content, you know, I'm way more comfortable now in my picks. So NVW is the latest one. I am very bullish on NVIDIA. I did publish a video on why I'm bullish on NVIDIA, and I spoke about buying this ETF. So again, this is a 1.2x levered ETF with income. So the thing is, if NVIDIA goes down, I'm going to really feel the pain, right? I'm going to really feel that pain because it is a leveraged product. If it goes up, increases in value, you know, I'll be able to dance around a little bit, you know, because I'll be able to capture a lot more gain, right? Versus just investing into NVIDIA. And I know NVIDIA, they offer probably like a very small dividend yield, like a laughable dividend yield. The weekly pays from Roundhill so far have been pretty good. This one has offered a 55 cent for every share on its last distribution, but it's not always been 55 cents. It usually kind of like fluctuates from here to there. I think they started off with like 37 cents, then 22 cents, then 19 cents, and now they have 55 cents. It's very similar to like that XDTE, you know, because XDT doesn't really pay out a consistent yield, you know, because it's a cover call ETF. These, I don't think they're cover call ETFs or they're like some type of credit spread ETFs. I don't know. I still, like I did a paper on these to actually understand them. I do have that paper. I'm not releasing that paper for the public, but it was basically comparing, you know, cover call ETFs, you know, basically from YieldMax versus these weekly pays from Roundhill. And, you know, I used ChatGPT. I used a couple different sources, a couple different documents to kind of compare and contrast them. So it was an interesting read. YEF, the cover call ETF strategy from Roundhill. This one is the one I want to get out of. I don't, you know, because if crypto winter does come and Ethereum and Bitcoin drop dramatically, I definitely don't want to be holding this, right? Because I will feel the downward trend much more than just investing in Ethereum. So I'd rather collect the dividend, which should be coming out at the end of this month, and then I will cash out of this. Hopefully this recovers to a point where I can cash out for at least a gain, if not break even. Because if I at least can do that, then that will be great. And then I'll just move most of this money either into NVW. I'm not going to buy any more PLTW, but I'll move probably a bulk of it into NVW and then hold maybe 10 or 15 grand for maybe another position in something else. Or I might just drop it back into XDT and XPay for additional money. All right. So that is that for this portfolio. For the REIT portfolio, which doesn't really get all that much love nowadays because it kind of just does its thing. I mean, real estate is very, you know, boring. It's not a very sexy asset class, right? There's very little stories for this. I hope you guys can see this. Let me just check the comments right quick. It's a Wealthy Life says they're launching robo-taxis in Cali. They just got the initial approval. Citizen of the Year says, why do you own XPay? I told you I owned XPay. I've been said that. I told you I own XPay and XDT. I like XPay. I have, you know, I like the whole return of capital. I know that's kind of a meme at this point in these income communities, but compared to another prominent fund out there that erodes in NAV, right? XPay, XDT have not actually eroded in NAV. So this is why you're banking on the price appreciation of the shares, or at least for the shares to maintain their price. So I'm banking on that while still being able to make a 20% return in dividend yield. So that is the reason why I have XPay and XET. They're the core positions. I don't need them to grow. I just need them to pay money and to maintain their NAV. And that is why I'm investing into XPay and XETE. It's a Wealthy Life says, damn, 80K in margin? Hell yeah, bro. You need a margin yourself, man. Just get in on that margin. You are down 6,500 on those 3 red positions. Are you collecting cash from those to make up for the loss? Yeah, I'm going to make a video probably later about the dividend stuff. But I mean, again, they're doing cover calls against the S&P 500. So the S&P 500 obviously went down in value. So these positions went down in value. So I'm not too worried about it, except for the Ethereum one, but the XPay and XDT, they're just going to track whatever happens to the S&P 500. So I'm comfortable with that. If the S&P 500 goes down, I mean, hopefully investors are intelligent enough to know that, oh, okay, that went down. So, XDT, XPay are going to go down, versus some of these other funds out there. You'll have the stock go up in value. These other funds, yeah, they will go up in value a little bit. But when those underliers, the underlying stock, when they drop, usually those cover call ETFs drop double in value. You can look at one called NVDY, NVIDIA from YieldMax. If you compare that with the actual stock, with the actual underlier, you'll see that NVIDIA has actually dropped double than what NVIDIA has. So just my thoughts on the whole thing. So anyways, this portfolio had a decent recovery. This one, again, $170,000 into VGT, which is a tech sector specific ETF. And we are down only 10% versus, I think it was almost close to 14 or 15%, which is, a welcome sign. Because once I dropped money into this, everything started taking a nosedive. And it was kind of shitty, to say the least, to see this go down $20,000 in a matter of a few days. But again, we look like we're on the recovery. So I'm hoping this will recover. Well, not hoping. I'm really just waiting for it to recover, because I know we will recover, right? This is all news driven. This whole thing was all news driven. It was all fear of tariffs. And now it looks like we're moving past that. We still have April 2nd to worry about. And then I guarantee the whole talk of sticky inflation will be back on the table probably in the next month or so. All this talk about inflation will be back. But again, I think as a nation, we're moving towards this whole normalization period where we're just used to having inflation, right? Scott Bessent, Treasury Secretary, he said the American dream is not to have cheap goods, right? To have the cheapest goods, right? It's to be able to afford them from, pay, wages, and things like that, to be able to afford to buy a home, right? So it's kind of like competing interests. We want cheaper things because that's what we think, is the best thing. But what if everybody could afford, and I know this is kind of way out there, but take a burger from Burger King, right? $10, right? That's expensive. That's really expensive. But what if everybody could afford a $10 burger from Burger King? I know that's a really superficial example, but that's kind of how I understand it. The American dream is not to have the cheapest goods. It's to be able to afford them, right? To be able to afford a house, to be able to afford, food, energy, housing, and being able to have a livable wage, right? That is what the American dream is, right? So I'm kind of along that same train of thought. It's a Wealthy Life says stagflation will be the talk. Yep, exactly. Stagflation is going to be all the rage in the next couple of weeks once we're over the tariff talks. So that'll do it for this portfolio, guys. We're pretty much at the top of the hour. Well, real quick, REITs, again, not all that sexy. Crown Castle just fired one of their CEOs, so I got to follow up on that. But, again, real estate is very boring, a very boring business. They just buy real estate, they put tenants in it, and then they just collect the rent, right? There's nothing really sexy here. I would say out of all of them, probably cell towers have the sexiest story or sexiest technology because they have cell towers, right? They get lumped in with a lot of technology companies, but cell tower providers like AMT, they actually have data centers, right? They actually own a couple data centers themselves. So obviously, if you look here, the market did not react very kindly to the news of the CEO getting fired. And they just sold their fiber segment business off, which was dragging them down. So it's like Crown Castle just keeps getting hit with, news after news after news. So hopefully we can see a recovery here for CCI soon. These are the two biggest cell tower providers in the United States, right? So this is why I like these two. Again, I didn't want to pick and choose. I like them both. They both have they have the same business model, but they have kind of like different sectors or segments in their business model aside from cell towers. So really, really cool stuff here. But that's it, guys. That we are at the top of the hour, just checking the poll. Should have checked this a long time ago. But the poll was, do you think we bottomed in the market and it'll recover from here? Out of 12 votes, we have 25% to yes, 50% to no, and we have 25% to cautiously optimistic. All right, I'm going to have to agree with the cautiously optimistic because I think the market is kind of getting over this whole tariff talk. Again, we have to wait until April 2nd, but it's not as scary. It's not the boogeyman anymore. We kind of have a direction now. We kind of know that the narrative is changing for the Trump administration, so we'll see what happens, all right? Just see what happens. We still have a couple trading days until April 2nd. I'm hoping Ethereum will continue to recover so I could sell out at a gain and then move that money into something else, all right? So other than that, guys, hope you enjoyed the stream. Have a great evening. Have a great rest of the day wherever you are in the world, in the worldwide web world. But you guys have a great rest of your evening. I hope you enjoyed the stream, got a lot of value. And of course, you guys know that without you, the stream would not be here. So I appreciate you spending some time with me and going over the news. All right. So other than that, you guys have a great night. I will see you in the next stream.